Hey, what's going on, everybody? It is Aaron Trevino here. We have another wonderful guest. We have Brian Briscoe from beautiful Idaho. Brian is the co-founder of the apartment investing firm Four Oaks Capital, and he's the director of the multifamily educational community, the Tribe of Titans, and the host of the Diary of an Apartment Investor podcast. He's recently retired from the U.S. Marine Corps after 20 years of service. Brian, it's a pleasure to have you on the show, and really looking forward to this one. How you doing?
Doing great, Aaron. Thanks for having me. Appreciate the invitation and appreciate your time.
Absolutely. I know that was a brief little intro on you, Brian, but aside from that, maybe those of us in our audience aren't familiar with you or haven't connected with you before. Would you
Mhm.
introduce yourself, please?
Yeah, so I grew up in Utah, and that's if do you record video on this, by the way?
Yes.
Yeah, so you got the Utah shirt. So if you're watching this, you see it. I've got a lot of Utah clothing, but anyway, grew up in Utah. Went to the University of Utah. I thought I wanted to be a college professor, so got a bachelor's degree, tried to get the best grades possible to get into the best graduate school possible. Got my master's degree from University of Utah too, and then decided to go big, and I applied to like 8 of the top 10 schools in math at the time. And I got into like 4 of the top 10 schools, and I ended up going to, University of Minnesota. Um, no kidding, like 3 weeks after I get there, World Trade Center goes down. So this is, September 2001. And, long story short, I decided to put my studies on pause and, join the Marine Corps. I was actually a reservist at the time, so I guess joining is not the right way to say it, but decided to go active duty and never really looked back. I mean, there were a couple of times where, I was comparing, one side of the fence to the other side of the fence, but end of the day, I ended up making a career out of the Marine Corps, stayed 20 years. Along the way, like a lot of people, I read Rich Dad Poor Dad, and that really changed how I thought about money, and started trying to pick up assets, as many houses as I could. And one thing about the military lifestyle is you move every 2 to 3 years, sometimes more frequently. I think the longest we stayed at one spot was exactly 3 years. So every time we moved, we'd look at the real estate market, and if it made sense, we'd buy a house, we'd live in it for 1, 2, 3 years. And when we moved out, turn it into a rental. So that was my plan for building assets. And it was a lot better than what I had planned before Rich Dad Poor Dad, but it wasn't moving the needle fast enough. Picking up one rental house every 3 years just wasn't making that, wasn't really making that big of a difference. So, I mean, yeah, we had accumulated some equity in a couple of the properties, and we had a little trickle of cash flow coming in, but it wasn't life changing. It wasn't enough for me to quit working forever. But it did establish a proof of concept, where I'd been dutifully, also at the same time putting money into my they call it thrift savings plan. It's the government version of a 401k, but and looking at the balance, the balances of both, I put a total of, I think, 25,000. Hold on, have to do some math in public, but put a total of like $40,000 on down payments into 3 houses, and the cumulative equity in those 3 houses was almost 400 grand, right? And in the stock market, I had probably over the course of 20 years put in over $100,000 in contributions, and I have maybe $180,000 in there, right? So when I started looking at the numbers and looking how a little bit of money turned into a lot in real estate, and a little bit of money is still a little bit of money in the stock market, it just started making a lot of sense. And so I started focusing a little more on building assets, but doing it faster. And also going on at this time is 3 or 4 years ago, I was starting to realize that I could start seeing that light at the end of the tunnel. The military retirement system is like a light switch. It's lights off until you hit your 20-year mark. And then all of a sudden it's congratulations, you can retire. Here's your pension. Here's your medical benefits. Here's your, everything going on. But right around my 16-year mark, I started thinking, I need to accelerate what I've been doing. Okay. I've done proof of concept. I know that it works. I just need to accelerate, and caught wind of multifamily and really just latched onto that one and said, you know, and I look at it as, buying 12, uh, buying a 12 unit apartment is like a buy one, get 11 free sale. It's not 12 times as difficult as buying a single family home. So, long story short, I knew I needed help. I had a very short timeline that I wanted to be able to hit my income numbers and my asset numbers. And so I paid for private coaching, did as much as I could to, I was in several different networking groups, several different coaching groups, just trying to get the best from everything and accelerate everything. But end of the day, found a couple of partners, and I'm doing very, very high level stuff, and I'll let you, pick where I focus on later. But found a couple of partners, and we co-founded Four Oaks Capital together, and since we've closed on 9 properties, total of 630 units, all in the Southeast, South Carolina and Georgia, and now we're looking at doing other things as well. We have an educational platform of our own that we really like. Started a podcast along the way to promote both our, Four Oaks Capital, the investment company, and our educational community, Tribe of Titans. And the part of the business that I ended up gravitating towards was the podcast and the educational aspect. Still involved with the other parts of the business, still looking at helping the company close on properties and whatnot, and then the management thereof afterwards. But my bread and butter, the daily grind that I'm doing right now, is more how to educate other people to do what we're doing.
Absolutely, Brian. And, I find these stories so fascinating, right? Whether someone's, career has been, really anything. It could be, it could be medicine, it could be law, it could be military, whatever it is. I find it interesting that you were in the service for 20 years. And then, at year 16, there was something that went off that kind of clicked for you, right? And you said, hey, I need to take another avenue here. At year 16, was there any particular moment that made you realize, hey, I need to go in this direction with real estate?
Yeah, it was another deployment. It was after the Iraq and Afghanistan wars have really kind of calmed down to where, Marines weren't deploying all the time. There was a period between 2003 and 2010, 2011, that if you were a deployable unit, you were gone for 7 or 8 months, home for maybe a year, and then you rinse and repeat. But 2016 was another deployment for me. And, there wasn't a whole lot of combat operations going on, but we still had to deploy. And, for me, it was just that there was this aha moment, kind of a wake up call of, being away from my family had gotten old, really quickly, and I started to, in a way, resent the Marine Corps for, taking me away from my family so often, and for missing so many birthdays and so many holidays, and just the special moments with the kids. I had the realization, it wasn't, the Marine Corps is going to be the Marine Corps. If as long as I stayed in the Marine Corps, I would continue to do the same thing. It wasn't really fair for me to resent the Marine Corps for it, because, I signed on the dotted line and I kept on choosing to stay in. So really the big aha moment for me was, I needed to change what was happening. And the only way to change, picking up and moving and being gone from my wife and kids, for, 7 or 8 months at a time, every couple of years, the only way to do that would be to exit, and so I looked at the calendar and I pinned the day, and the first day that I was eligible to retire was October 31st, 2021, which was a couple of weeks ago from right now when we're recording. But sometime in about 3-4 years ago, I picked that day and said, that's it. I'm going to serve until that day, and that's it. And from there on, the focus of my activities were in preparing myself to make that jump, and not doing what everybody else does. I'm not saying everybody does this, but there's a large percentage of military that will exit the military, and they'll find a job somewhere in the military industrial complex, where you'll see them, in their uniform one day, and then at the Pentagon, this happened very frequently, that they walk out on their retirement day in their uniform, and 2 weeks later they walk in a business suit, working in a different office. A lot of times out in the operating forces or the deployable units, that retire and walk off base in a uniform and come back 3 weeks later in a polo shirt, working for one of the companies that builds, the systems or the weapons or the trucks or whatever. But I decided that that's not what I wanted to do. I wanted to do a clean break. Real estate has always fascinated me. And so my goal from there on out was, let's build something, within the multifamily real estate realm that can support my family and allow me to get out of the military when I want to get out. And, fortunately, we've been able to do that. At the time of recording, I've been retired for, 15 days now, which is awesome. Last time I had to actually go to work was, mid-August. So I guess officially I've been retired. September. I have to pull up my fingers to count. Was that 3 months? But yeah, so 3 months unofficially.
Yeah, absolutely. I find this so interesting because, whether it's military or really any career, if you're so used to, a certain way of conduct or a certain way of doing things, your routine, a certain way of thinking, it can be very scary for people to transition into something else.
Mhm.
If you're in a situation that's not ideal, it's easy to complain or easy to lay down. But for you, you recognize, hey, I need to take this other avenue. And you were planning, well in advance for, where you're at now.
Yeah. And I'll say you make a good point. Part of the reason I stayed in so long was straight out fear. I had 2 degrees in math and very specialized math. I wanted to be a college professor. And, the longer and longer that I stayed away from school, the less marketable I felt that I was. Whether it was true or not didn't matter. That's what I felt. So there were several times where I thought, let's see, if I get out of the Marine Corps, what kind of job am I qualified for? I spent the last couple of years trying to shoot down planes. Nobody in the civilian sector wants that. We try to keep our planes in the air. So and my degree got older and older, and it's not that the math changed, but there are a lot of things that do change. And I had spent a lot of time away from the field. So part of the reason I stayed in is every time I had the opportunity to get out, or I'm at the end of a tour, or my number comes up where I get to make the choice. A lot of it was just like, I don't know what to do. The easy answer is just to stay in. And that's what I did for a long time, was just stayed in, because getting out was harder than staying in was. And until we finally got to the point to where I realized that, staying in was harder, and that's where, I guess the teeter-totter flipped, and all of a sudden it was just like, all right, I'm getting out, October 31st is the day, and, come hell or high water, I'm going to do it.
Absolutely. No. And I mean, that's a testament of, courage and faith, and, putting one foot in front of the other. Right. And I'm curious as well, maybe someone, they're in the military, they're looking to transition out, they're getting out shortly, maybe they're out right now. What sort of message would you have for someone that's in the military that's looking to, transition into their own business?
I would say you have to understand your why, know what your why is, and my why for getting in the military was September 11th. That was my big why. But, over the course of, 15, 18 years, that why became less and less important, and then eventually what really pushed me, what drove me, was figuring out what my new why was. And that new why became, I never want to miss another birthday. I never want to miss another Christmas. I never want to be away from my family on special events. And that became my new driving force, which required a career change. So So I would personally remind myself of that. I would put myself mentally, I'd close my eyes and mentally and emotionally place myself on that last deployment and remind myself what it felt like to miss birthdays, what it felt like to miss Christmases. So, for anybody contemplating the change, just keep that why in the forefront. Know why you're doing things. And if your why is strong enough, the actions will fall into place. Your motivation is going to be there, and you'll be able to take that next step even when it's hard. So it's not a rose garden. It's not easy, building a multifamily business, but knowing that why and understanding what I was building and why I was building it kept me motivated and kept me pushing forward.
Absolutely. I like that a lot, Brian. And it's it's looking into the future. It's, staring into the dark abyss. And, frankly, that can be very, very scary for anyone, right? To go out on your own and go into uncharted waters.
Yeah,
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 absolutely. And
difficult.
one thing you touched on earlier was I forget exactly what you had said, but you said if you have 12 units, you're essentially getting one and then getting 11 for free or something like that. Could you kind of explain maybe what speaks to you about more so multifamily compared to smaller rentals?
Yeah, and I don't think there's anything wrong with smaller rentals. I think the ability to scale is a lot, not necessarily easier, but it's a lot more straightforward with apartments. So, um, with single family, I think what I was trying to do with single family and I would save money until I had enough for a down payment, and once I had enough for a down payment, we'd buy a new place and we'd turn it into an investment property. And there are definitely ways to use other people's money with single family homes. And part of what appealed to me about multifamily was, when you're going big, it forces you to go out and look for other people's money to raise private capital. And that part appealed to me as well. It scared me, but it also appealed to me knowing that, I could partner with people with experience. I could use my previous professional experience and translate it over. And, it ends up being something you can scale a lot quicker than single family, so I mean, it's not exactly the same as a buy one get 12 free. There's a lot of extra stuff that happens in between. But our first multifamily acquisition, we purchased a $4 million property. I put $100,000 in. My partners all put some money in. We all put about $100,000 of our own in, and we ended up raising $1.5 million for it. So, it ended up being something that we could grow our bottom line a lot faster by doing a multifamily syndication. Because I mean, not only do you have your money invested and you're earning returns on your money, but you're also part of the general partnership. And so you end up with, a little sliver of ownership in addition to, the money you have invested. So looking at the scalability, when you're doing the syndications, you maximize your returns by investing your own money and being on the GP side. But, because you're out there, finding the properties, raising the money, putting the deals together, closing on the properties, operating them afterwards, and making things work, you end up boosting your returns by quite a bit. So, our typical GP LP split, as general partners, we're usually walking away with 20 to 30% ownership in a property, which is a lot of sweat equity. I mean, that's a lot of sweat equity. But at the same time, instead of 20% ownership in a single family home, you're talking 20% ownership in a multi-million-dollar property. And anyway, it just helps you to grow your bottom line a lot faster.
Absolutely. And, it's interesting hearing more about, kind of the leverage, really you being able to kind of, obviously mitigate risk, but yet at the same time, there's a nice upside when you're, thinking a bit larger and, of course, thinking outside the box as well.
Yeah, and I mean the market's been very favorable for us in the last couple of years, and I expect it will for at least the next couple. I'll pull out my crystal ball, and the future still looks pretty bright. But um, you mentioned leverage. I mean, the great part about one of the great secrets of real estate is just a concept of leverage. So we are leveraging bank money, we're leveraging other people's money to be able to grow our own assets. But the leverage we have on the bank money, I mean, we're getting debt at 3.5% right now. Wall Street Journal yesterday said the annual inflation rate 6%. I think it was 6.4 over the last 12 months. And so when you start looking at that, if banks are giving money at 3.5% right now, and the inflation rate's 6.5, it's like the banks are paying you to take money. And incidentally, these properties are going to be appreciating at least as fast as inflation. So you're paying 6% on several $1 million worth of loans, and that money, that value is going up by a lot more than 3% every year. So the leveraged returns are a lot higher than you can get just about anywhere else. I mean, yeah, it is possible to do the same thing in the stock market. You can buy on margin, you can buy on leveraged money and try to boost your returns. But I think multifamily especially is much less likely to go down, and you're much less likely to lose a lot of money than you are, say, buying on margin in the stock market.
Sure, absolutely. And it kind of seems like, you touch on the stock market there that,
Mhm.
obviously with crypto and, maybe the stock market's more familiar with people. Maybe some people are hesitant to even step into real estate. In a way, it kind of seems like real estate, although, there are fluctuations in the market, it could be a bit more stable than the stock market.
Well, I mean, the stock market has historically gone up, real estate has historically gone up, so, if you're thinking long term, I think both are viable, but, if you look what it takes, conventional wisdom, you park your money with an investment company who's going to park your money into index funds. They're going to charge you 2% per year to put your money into index funds, right? I mean, it doesn't make a whole lot of sense. When you look at all the fees and everything else involved with the stock market, um, it's not as attractive as it seems on the surface. And then with real estate, you have this thing. Real estate is one of the most tax advantage investments that you have. So if you have capital gains in the stock market, you're paying capital gains on your tax form every single year. If you have capital gains on a real estate transaction, there's a lot of ways to defer those capital gains into future years. And a lot of people will say, well, I mean, if I'm going to have to pay the tax in a couple of years, I mean, why don't I just pay it now? Well, I mean, if you can save yourself, 20 or 30% in taxes, reinvest that 20 or 30% and keep on deferring that tax bill. Now you're growing you're getting returns on a larger percentage or a larger number instead of the smaller number that you would have, if you're paying taxes on your stock portfolio every year. So it just compounds really, really quickly. And, the overall returns you're going to get from real estate are going to be much higher. And the other thing that I commonly refer to is real estate is the original investment. Stock market hasn't been around for that long. Okay. People have been investing in a real estate, and, wars have been waged, many, many, many times in our past over real estate, because real estate has been that valuable forever, and so, real estate has been the original investment. It's not going away, and it's still going to be a solid investment forever.
Yeah, no, absolutely. And I like your, frankly, your long-term vision there, right? Because you kind of you kind of talked about, capital gains and deferring and really looking at it, through a long-term lens and saying, hey, if I can hang on for X amount of years, this may be a better avenue for me to take financially.
Yeah. Yeah, and a guy that's lives close to us here told me a story just recently, and I've repeated it several times. But um, he was a builder. He built really, really fancy homes in Southern California, Beverly Hills, Santa Barbara, just he built the home that Dr. Phil lives in, things like that. But um, he was saying in the 1980s, he was nervous about paying $80,000 for a home in Santa Barbara. I think he said this was like 1982 or something like that, and he just had this idea that like it's way too expensive, there's way too much risk in putting $80,000 into a Santa Barbara home. That house right now, 40 years later, is probably worth 4 to 5 million, and it's just one of those things. I think, 40 to 5, a lot of people are looking at the prices right now and saying, how are people paying these prices on these houses? Well, if you have that long-term vision, 10, 20, 30, 40 years from now, people are going to look back at today's prices and they're going to be like, wow, I wish I could have bought a single family home in Idaho Falls for $500,000 back in 2021. That's just how the market works and how it's worked for centuries.
Yeah, no, absolutely. It's what do they say? Everything's 2020 in hindsight, or maybe I got
Yeah.
that.
Yeah, I mean, yeah, hindsight's 2020.
That's
I obviously there are, corrections, there's cycles. There's times where real estate booms and there's time where real estate, retracts a little bit. Or maybe there's a little bubble that bursts here and there. But for the most part, if you have that long-term vision, the 10, 20 years time frame, you're going to have corrections, but time's on your side, when you're investing in real estate. Like I said, you could say the same thing with the stock market, but once you throw the tax advantages in, once you throw the leverage in, I think the clear winner is real estate in every case.
Absolutely. That makes a lot of sense. Maybe someone, has a bit of cash on hand. Maybe they're looking to do any sort of deals, or maybe they just are looking for maybe a step-by-step guide. For someone who's looking to get started, where should you even start in terms of educating yourself on, on multifamily?
I think our multifamily educational community is a great place to start. The Tribe of Titans. Thanks for pitching that softball to me. But there's a lot of programs like it. So there's a lot of people who are willing to help out. Like I said early on, I was involved in several different programs. Some of them were pay to play, some of them were free, and doesn't necessarily mean that the pay to play ones, I mean, sometimes the free ones were just as good as the pay to play ones. But what I ended up finding is the more money that I spent on a program, the more likely I was to actually do something. I mean, I've signed up for dozens of free classes, or $10 or $20 classes, but anyway, long story short, there's lots of resources out there, a lot of good podcasts that can teach you. But I think if you really want to take the next step, you got to gravitate away from the podcast and move into something that's, more sequential, more curated, more here's step one, here's step two, here's step three. And that's just the knowledge part. A lot of people have said, and I think it's absolutely true, real estate is absolutely a team sport. So you also need to find network, because to tackle one of these big properties, you have to have experience to get a loan. You have to have experience to get brokers' attention. But you need to have the people around you that can help you attract the deals and help you attract the capital. So really what I say is find a place where you can learn the business, learn the ropes, and find somebody who has experience that can help you along the way.
That's right. And, wonderful insight there, Brian. Is there anything that you haven't said that you really just like to hammer home for us?
I'll just reiterate, it all comes back down to your why. If you have a big enough burning why, you're going to find a way to get it done. I like multifamily for a lot of reasons. It's not the only way to, it wasn't the only way, 4 years ago for me to get to where I wanted to be. But, multifamily resonated with me. So, back to your question, somebody who wants to do something similar to what I've done. Yeah, just figure out what your why is, find a vehicle that you can get behind. Like I said, for me, the why was, not ever deploying again, not missing time with my family. For me, the vehicle was multifamily, and I focused on learning, I focused on growing, and I focused on meeting the right people to help me get to where I wanted to go. And that's really the recipe for anything.
Yeah, definitely. Well said, Brian. We've covered a lot of ground here, talked a bit about your military career, transitioning into real estate, acknowledging what your why is, and some great tips for tips and insight for multifamily. So I definitely greatly appreciate you coming on the show.
Yep. Thanks, Aaron. I appreciate your time.
Talk later. All right.
There.
Give me 1 second.
No problem.